Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, November 24th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Going to be a little bit lighter volume here coming into the end of the week, especially as we taper off into today's session here and throughout Friday. Be a shortened session on Friday. Some of the markets will be open, but very light volume. The only real event is going to be the expiration for U.S. equity options coming in on Friday. But other than that, I would anticipate that would be a slower session here. So looking at the metals markets, it was really a muted session. There wasn't a whole lot of action once we got past the economic data release. Gold, silver, platinum, palladium, they all kind of traded in and out of positive territory. We did see some action on the durable goods coming back into copper. Copper has actually done quite a bit of a recovery here. We're back at an opportunity where we might see copper futures break out to the upside. The only thing that I hate about copper is that every 100 points on it, every penny move is $250. There is a smaller contract. We're going to have to look at the volume and open interest on it to see if it's something that would be appropriate to get involved with. Now looking at gold, gold really, you could start connecting some of these bottoms again and come up with some new key levels of support, but it really looks like we're converging right here. I did write an article that'll get published on Kiko that discusses a strategy going out to April, buying 2 the 10-ounce contracts around 1780, buying 2 more at 1725, which is right about this key level of support here. And then you'd put your stop loss down below. This is going to be major support. That's that bottom that we bounced off of 3 times at 1685. If you put the stop down at 1665, you'd be risking about $3,500, and then you would hold for a move back up. So really, when you start trying to catch the falling knife, you want to use smaller contracts. You want to have time on your side. So, on platinum, you'd go out to April. Silver, you'd probably be at that March contract. Gold, you'd probably go out to April too, if you're going to try and catch that fall. Now, the interesting thing about gold is that I think we are going to probe some kind of bottom relatively soon. And the reason is that 10-year treasury yields, they're getting a little extended on the upside and the futures on the downside. And I went back to Market Watch and I was looking at some of these charts going out, a year out. It'll pull it up right here. So you go back, you really got to go to the 2-year and the 3-year chart to see it. So you go to the 3-year chart on 10-year treasuries, and you could already see that, we saw a growth peak in 2018, and it was starting to, in 2019, it was starting to roll over. We were going to a slowdown that started 2020 anyways, and you could see right here, as 2020 begins, yields were selling off. And this was when really COVID started to come, this acceleration. And then since then, we saw a double bottom on 10-year treasury yields. And this right here is going to get you into that August time frame. And you can see this low. I wish this chart didn't have that box there. But you can see that low. That was when the peak on gold occurs. So back up at that 2100 level. You guys all know the story. So since then, I believe that the highest we're going to see on 10-year treasury yields will be right at this 172 on up to 2%. You can't get much higher than that, in my opinion, because of the fact that the cost of the debt will start to burden and weigh in on economic growth and cause a new slowdown. That's where deflation comes into play. Plus, remember that CPI is going to remain above 2%. 10-year treasuries, I don't think that they'll get above 2%. So you're still going to have those negative real yields out there. So looking at silver, we're probably going to do another strategy where we come in and we start to buy 1,000-ounce silver, here at these levels just below 23. Then we come back down to another one down at 2152. We'll come into a scale in and we'll try and go farther out. We know that with all these green energy initiatives, and I'm telling you, driving from Florida to Chicago, I've never seen so many solar panel fields and as well as solar panels on top of businesses. So I really do think that it's starting to catch wave, and you're starting to see, more and more solar be adopted into different, land and uses, and even in front of the Nicor Energy, they've got solar panels, which I've never seen it before. So I think that solar demand will pick up, and you will see it start to outstrip, because mining production has just been relatively flat on silver. So platinum, this one was really disappointed. It got hit by 3-4 pockets of selling. This false breakout we talked about here. Some people came in 1050, picked up a contract. 995 was a second level. And then between 956 and 950, we had some people picking up contracts as well. If you saw on CNBC, they did have some talk about automotive demand. They do anticipate a pickup. So I believe that we will see the bottom on platinum as well. So, a lot of these technicals that we're coming into oversold territory. I don't think we're going to go into a full-fledged bear market. Now, the dollar has really weighed in. It's relentless assault to the upside. That was kind of really the knife in the back on gold, as well as Jerome Powell being nominated, and he'll most likely be reinstated. So looking at a couple of these other markets here, you can see that rising yields are really weighing in on Bitcoin as well. That's been selling off. It's kind of hugging the bottom of the trend line. We have been picking up some contracts down there. The foreign currencies, just a bloodbath on the euro currency, on the British pound, and etc. That COVID, we talked about how this probably roll back over, make a new low, which it did. COVID, those lockdowns, I highlighted the cases. They are picking up speed. Not deaths. Deaths are not, but definitely COVID cases, not necessarily hospitalizations, but positive tests are all coming in. That's going to weigh on growth, but remember, if you bought the lockdowns, you bought the bottlenecks, you buy the supply chain disruptions, all those stocks, when they do come out of it, you see that lift off. That's why I really am a big believer in oil and also on platinum. Oil's done a really good job. It's starting to come back, and you can see OPEC's already playing the game with the Biden administration, them lobbying for all these cuts and everything else, and releases. Well, at least the releases of the Strategic Petroleum Reserve. OPEC already came back to the drawing board, said that they're going to reassess their current output and their productions. Don't be surprised if it ends up being a miss and we get oil prices back between this 80 to 85 level. So stay optimistic. I really think that, position sizing, that is the thing that is the most important thing when you're trading, especially on commodities. You could be wrong many times, but if you have the length of time on the contract, you don't have that rollover premium where it's going to weigh in, like products like natural gas, where you're selling one 20 cents below the other one, and it just being such a big contract, that's the one that can kill you if you get wrong. Palladium, that's another one. Palladium, you get this big sell-off, you don't have that mini contract, it moves, the velocity of it is quite high. Those cause big problems. That's where I see 90% of the customers that lose money, they're either too hard-headed on their narrative, they're going to fight, like on the equities, they'll fight the upward trend. Say they were bearish on oil, they'll fight it all the way up. They will exhaust all their capital there. So if you have the right position sizing, you have the right contract month, and you use a scale in, come in incrementally on the way in and out of your positions, I think you'll do much better at commodities and trading. So that's really all the advice I have for you today. If you check out Kitco, I'll have an article up there. We will outline some of the strategies on the gold market that we're doing. And again, Friday I'm going to be out of pocket driving back to Florida. So I'll be able to answer the phone, but really not give a whole lot of trading advice here because I won't be in front of the charts. But if you have any questions, futures option trading, give us a call. And then also remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading. Have a happy Thanksgiving. Bye-bye.